Okay, so everybody, we have a great panel today. Obviously, M&A is always top of mind. And in market conditions like this, there's going to be a lot of deals that are being done. And so we have 4 great experts who are going to be joining. So I want to first welcome on stage Eric Hodge of Rain.
How's it going?
Sir. And for guest number 2, Emily Wang from Lion Tree.
Where are we sitting?
Emily, good to see you.
Good to see you.
And then we have Carlos Jimenez from Moelis. Carlos.
Hi.
How are you doing?
Where am I sitting? Over here? Over here?
Wherever you'd like to sit. Yeah,
over
we're
here.
casual.
right.
And then fourth, Andy Howard from Shamrock, private equity firm Shamrock.
Hello.
And everybody, what we're going to do is, it's going to be lively because we have a short period of time. I'll try to keep 5 minutes or so for Q&A because there's going to be a lot of questions I'm sure you have. We're going to start high, macro, go a little bit sector by sector, and then do a quick lightning round of bam, 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 individual companies that are probably top of mind. So we'll start with that. All right, so first of all, just really, really quickly, in 30 seconds, what do you do at your firm?
What do I do at my firm?
Yes.
Oh, that's a loaded question.
Oh, you know.
Shamrock Capital, we're a private equity firm. We're managing just about $4.5 billion, focused on media, entertainment, communications. And what do we do?
What do you personally do?
Pattern recognition.
Okay.
That is our job,
right.
identifying opportunities
Yeah.
and helping our companies grow.
Good. Very good. Emily, what do you do at Lion Tree? And tell us a little bit about Lion Tree.
Sure. I'm a managing director at Lion Tree. We're an investment and merchant bank focused on media and tech, and I focus purely on gaming. So I forewarned Peter, I will talk his ear off on gaming specifically.
And a little Web3.
A little Web3, yeah. So we advised Take-Two on the acquisition of Zynga earlier this year. We also sold a company to Netflix recently.
Great. And Eric, tell us a little bit about you and Rain.
Sure. So I'm a partner at Rain, which is also a merchant bank focused on tech, media, telecom. I run the LA office out here and focus mostly on entertainment content and the technology around that. I sit on the boards of Imagine and Propagate, which are 2 great content companies, VideoAmp, which is a ad tech company, and worked a lot with Candle Media, helping them get started last year, worked a lot on deals with Netflix, sold a couple companies to them, host of other stuff.
Excellent. And Carlos, how about you and Moelis?
So I'm also a partner at an investment bank. It's called Moelis & Company. We're about 15 years old. I jokingly tell people, if you like to watch it, listen to it, play it, or do it, basically anything you want to do for fun on the weekends, those are my clients. So whenever they want to buy something, sell themselves, raise capital, we put our arms around them and go get those transactions done. So some that you'd probably recognize, we just raised a bunch of money for Peter Chernin and North Road, brought in Providence Equity, and they bought Red Arrow with that. Or when Legendary was looking to bring in a new investor, we introduced them to Apollo, did that deal. Or when UTA, the talent agency, was looking for some liquidity, we got them a new partner in EQT. So we match make.
Okay, so whenever we want tickets to live events, we come to you.
I'll get you a guy.
Okay, I like that.
I want that guy's number 2.
I will hold you to that because we'll be talking about live events too. All right, let's start high level, like I said, macro conditions, and let's not just focus on U.S. internationally. So I'm going to throw it out there. Conditions out there. What are the driving factors of deals that are going to be upcoming right now? Market conditions. What are they looking like? For buyers and sellers. Sure. Eric.
Go for it.
You know, so I think the macro, I think Bob Iger said this, and it's always a good idea to repeat what he says. Like, there's a lot of anxiety, and that's just a fact. You have a global situation that's unsteady. The stock market is down. Media companies are down 40% and more. It's an incredible time of transition. You have a company like Netflix, which was kind of leading the charge, that now has to transition from a single revenue stream business to a multi-revenue stream business. And then you have the other media companies working on their streaming. So there's a lot of transition, but I think there's an unbelievable amount of opportunity. And if you look at the history of media, the transitions have been harder than this, frankly. You look at Netflix, they've pivoted 2 times to 3 completely different businesses nearly flawlessly. You look at, in my lifetime, going from broadcast TV to pay TV to premium TV to streaming, like those were all very hard pivots. So I think it's an incredible time of opportunity. You have a moment where audiences are connected to content creators and advertisers more than they ever have been. So if you can kind of take the anxiety out of it and recognize that things are changing, I think this is one of the most interesting moments we've been in my career. So,
But the anxiety is also a good time for buyers.
correct.
100%.
Okay, so expand upon
I would,
that.
I
a bit.
was, I was on a call, a couple calls yesterday, Zoom calls, where people are sitting there saying we're staying on the sidelines, or lenders are making it obviously a lot harder to get
Yeah.
leverage. This is the time to lean in. I mean, our job is not to go to the beach and hang out for the next 6 months. It's really to find where the opportunities are, because where there is disruption is creating that opportunity. So it's finding those talented managers, the solid business plans, that are needing capital and looking to lean in this period of time versus sit back and watch what their peers are doing. So we're seeing a lot of founders who are quite excited about this time to say, hey, I want to go do acquisitions, or I want to invest organically in my business plan, but I want to take that capital. I understand there's going to be structure.
Okay, so you're saying the founders are actually looking not just to be sold, but to buy other companies.
Or to invest into their business. And we're
Yeah.
also seeing some spin-offs. We're seeing some of the strategics recognizing that, they need to shore up their balance sheet, that this is the time for them to shed off certain assets. So we're looking at it, and we've made 4 investments in the past 3 months, and we have a couple others that will probably close before hopefully year end. This is the time to go.
Okay,
So Peter,
just-
let me give you
yeah,
the flip
go
side
ahead,
of that,
Carlos.
just because, so Andy's life is deploying capital, which is great. He's seen opportunities, which
Yeah.
usually mean less competition, lower valuations, right, because the markets are soft.
Right.
Here's the flip side of that. Flip side of that is I'm sitting in a room with my client or someone who's thinking about raising money or selling themselves. We're lining up, books pretty, everything's ready to go. And my advice to them right now is, if you don't have to go,
Yeah.
wait.
Well, of course.
Because it's just, the environment is so tough right now. It's just, the number of parties that are lining up is just going to reduce competition, lower prices. So wait if you can.
Wait, though, the only thing I would say, and if I were just to take this a step further, if they're looking to do acquisitions, if they're looking to take primary capital to grow the business, now is the time versus their competitors who are maybe thinking the same thing of going, okay, should I wait? So if everybody sits on the sideline, not a lot happens, but now is a good time to put that capital to work.
I'll stay true to my promise, too, to talk about gaming. I think gaming companies, the large caps actually trade at about a 60% premium to small cap gaming companies, and that's because of the advantage that they have with data and being able to use that data to drive live operations. So in this environment, when the large caps are trading at even a greater premium, there's an opportunity to capital arbitrage on the multiples. And so I think we'll be seeing a lot of, looking at large-scale mobile players. There's very few and far between in the market, and there's opportunity to capitalize at these discounts.
For the benefit of the audience, I want you to explain a little bit what you meant by arbitrage in that context, on the valuations.
Sure. So when you have the large cap gaming companies that are trading at premiums of 60% to the smaller cap, there's an ability to basically capitalize on acquiring these smaller companies and being able to increase the value when they start to trade essentially at a mixed multiple or closer to the larger multiples that these larger cap companies were trading at before.
Okay. So market conditions in terms of valuations, access to capital, tell me if this is right. So smaller companies that are in that market and they need capital right now, they typically would go to venture capital or something along those lines. They don't have access to that capital right now, so they're looking at their alternatives. They may be ripe for the picking. Let's say a small technology company may be ripe for the picking by another privately held company or somebody else to help their platform. And then any one of these, the big, and I want to talk about this too, big tech companies with their massive valuations that have dropped, but nonetheless, others that are beneath them are going to be trading at much cheaper valuations, so they will be bargains, relatively speaking. Is that right, generally? Anybody
You're
disagree
getting
with
a
that?
lot of head nods, so that means yes.
Okay.
Yeah.
Okay, so big tech, and do you include Meta as big tech now?
Pretty big.
Okay, you still do. Okay.
They're not as big as they were, but
Market cap is about 400 million now, or billion now.
I think they're always going to be included in that
They're al-
category, just given their
Okay.
legacy.
Yeah, but I guess the interesting thing about Meta from an M&A perspective is almost every deal you see them try to do gets
Right.
stuck with review, including if it's VR fitness. You know, it's been, or Jiffy, it's pretty remarkable how much scrutiny that they have on them for all the moves that they're
Great segue into antitrust.
favorite
Antitrust
topic.
shutting down what Meta is looking at, but also looking at everybody else. So how real is the antitrust threat to big tech and what you're all doing?
I think it's very real. And let me give you guys a couple case studies that probably hit close to Los Angeles where, you know, smaller companies are getting under review. So when everyone knows when CAA attempted to buy or did buy ICM, they went through the ringer in terms of just the antitrust review process. And we've been in a lot of those boardrooms where buyers and sellers are thinking, like, do we want to go fight with the Department of Justice to go get a smaller transaction done? So I think it's going to be highly magnified, and you're starting to see it just in the politics that are playing out.
Yeah, and I would add Amazon MGM to that. I don't think anyone expected the level of scrutiny that they had from that deal.
Right.
And
It was real.
In the gaming space, Microsoft Activision is obviously the one to talk about. It's a $70 billion deal, and it's still under regulatory approval. And so I think regulators are basically discerning how much data is too much data for Microsoft to have, and also is Microsoft going to do things like put Call of Duty and StarCraft and World of Warcraft behind Game Pass exclusively. So those are the things that the regulators are considering. I think there are also some nuances that they aren't considering, which is that game developers actually don't want subscription to be the future of gaming. Because right now, game developers put out a game, and consumers are basically ascribing the value to that game. Whereas if it's behind Microsoft's Game Pass paywall, then Microsoft is the one kind of behind closed doors discerning that value. And so the deal is still under scrutiny, and Activision is trading at a discount to the acquisition price, which indicates that the market is not sure if the deal will go through.
Okay.
So I'll just add one more thing, just because you helped me through an antitrust matter. I've been through them twice.
That's right.
I failed twice.
I like to see that competing companies.
Oh, no,
we
when
were,
he was
we were on the
advising.
same fight. We were on the same fight.
Okay.
One
I think
was
our
Screen
company
Vision-
was the one trying to merge with their company.
Yeah, Screen Vision, NCM, FanDuel, DraftKings, and we went through them, and we got blocked, and it's awful. It's a massive disruption to your business.
Yeah.
Because you're in this limbo period where you really can't operate the way that you would have liked to have operated. So I do think it's in the mindset of operators, strategics right now, thinking about how far I press it. Is it really worthwhile? What does it do to my business? And if you're the one who's getting acquired or merged, depending, it's a big leap that you're going to have to make because you're going to be under scrutiny for a period of time, and that timeline is unknown.
Well, that's the thing. Like every single one that we consider big tech is going to be thinking this way. And so what that does to the planning of, well, first of all, everything you all do, of course, as you advise them, but just for their planning, and do you think that where we are in antitrust and where things seem to be going, could that change depending on the outcome of midterms?
I'll be honest, it doesn't come into play as much, with the exception just if you're talking about the media world.
Yeah.
Everyone gets the media bump, right? Everyone always says every 2 years, advertising is going to skyrocket because all the politicians need to put capital to work in advertising.
Yeah.
So other than that, it hasn't really come into play in my boardrooms.
No, but I'm saying that, like, depending on if there's different control in Congress, can that impact where antitrust is heading?
I don't think so.
Okay, you don't think so right now. Okay, interesting. All right, so big tech, as we think about, since we're focused on media and entertainment at this event, big tech, we're thinking, and then I'm going to get into specifics, Netflix and Warner Brothers Discovery and some of these companies, Viacom, Paramount, that many believe are ripe for the picking. So the likely buyers would seemingly be big tech for any of these, these kinds of companies. Is there anybody else beyond the large technology companies, and is there any way to kind of break, for lack of a better word, the stranglehold that big tech has over the media and entertainment business?
I mean, I don't think, other than Amazon MGM, I think we've been waiting for years and years and years for Google or Facebook or one of those companies to make the M&A play. And they haven't really made the scaled play. Netflix, I don't know if you're considering them big tech, like they're their M&A has been very measured, very smart.
Yeah.
But they haven't made the big moves that I think a lot of people were expecting. I think a lot of people in my career have been waiting for Google to make the play, and they haven't. They have YouTube. It's a great business. I don't think they need to do much more than that. So I don't know that I see it.
I tend to agree with them, and God knows I've tried, because I've
Yeah.
pitched just about every
Yeah.
major
Yeah.
studio deal to them on the planet.
Yeah.
So we're speaking over here from experience, but you never know. Here's what I actually anticipate maybe happening that's a little bit different, which is I think it's going to be very hard to challenge the big tech companies. But I do think there's going to be changes in paradigms where you see Netflix getting into gaming, as an example. She just mentioned another deal where the worlds are colliding. And therefore, at some point, they're going to look around and say, we need some capabilities in-house that we just currently don't have.
Yeah.
And I think you're going to see more titans across sectors coming together.
It's interesting, too, the rationale for Netflix. They were actually not too focused on how well the Stranger Things game was performing. They were more interested in acquiring the game studios to increase retention of their existing subscribers. Obviously, there's talk about how the subscribers have kind of capped out in terms of growth as well as retention. And so it's interesting to see, to your point, the rationale that's not just focused on financials or metrics as they are in today's state, but more about what they can do strategically for Netflix.
So in that case, to keep the franchise alive and breathing in between their actual series, things like that. Yeah.
Exactly. So you already have people on your platform watching the series. You just keep them on your platform to play the game later.
Yeah, yeah, okay. And internationally, are there any themes that we should be thinking about, or some buyers, like big buyers that don't get enough press?
I mean, I think there's been a lot of press around it, but maybe not enough. If you look at last year and this town and the deals that got done, there was an unbelievable amount from Korean buyers, right? So Naver bought Wattpad, JTBC bought Whip, Hybe bought Scooter Braun's company, Nexon invested in Agbo, CJ bought Endeavor Content. I mean, that's 5 deals and very big deals. And I think the thesis behind that around exporting content from Korea is nowhere near done. So I think that's still a really interesting exchange that's happening. I'm also seeing more in Europe right now. Some European buyers or European companies that have kind of come into their own as scaled independents that are looking more in the U.S. to become
Who
more.
are some of those companies out of Europe that we should at least have on our radar screens?
You know, there's Banijay, there's Media One, there's companies that private equity have backed there that are all getting to that moment where, you know, they can further globalize. And these are great companies that have really interesting content that they own. So I think both Europe and Korea are still pretty interesting places to keep an eye on.
Okay, so now from a macro perspective and just the overall environment, any other big themes that you guys would like to cover, or should we go sector by sector a little bit? Ready to go? Okay. So let's get into film and television, and however you define film and television, since it all kind of comes together. But what are forces that are driving deals within that realm?
I could probably start that one, and I'm sure everyone's going to have a viewer chime in, including you, because you've been putting some capital to work recently in this space. So I think first and foremost, let me state the obvious. There's a content boom happening, right? You need that shiny object on Netflix, on Apple, to make sure you don't churn off. That's the obvious. There are people that are saying, well, wait a second, it's slowing down. You see what's happening at Warner Brothers. They're pulling back on content. Netflix has said, we're going to try to get a little bit more profitable. My personal view is that's short to medium term. Over the long haul, I think the smart money is betting, and we're seeing it, that content boom is going to continue to play. Mm-hmm. And within film and television, you're seeing a ton of capital coming into the sector. And as I say, there's like these pillars of M&A that's going to happen. One is Legendary and Apollo. They're going to be aggressive. We just loaded up Peter Chernin and North Road with Providence Equity Money. They're going to be aggressive. You've seen what Candle Media has done. There's going to be a few others, one that's going to be announced in the next 24, 48 hours. You're going to say, okay, here's another one that's been set up. And that's
which
just
one?
film and television.
I agree. Which
You
one?
can tell me, I won't tell anybody.
Well, I'll tell it during the break. So you're going to see all these things popping up and more M&A activity. And by the way, it's not just within film and television. It's all what I call is the picks and shovels around it.
Oh, yeah, for
all
sure.
All the services businesses are also riding that wave.
Yeah, and that's a really important point when you're talking about different like tech platforms, tech stacks as well. Yeah, for sure.
So I would agree with that. I think just to drill into the pockets that I think have a lot of value. IP is perennially the most valuable, right? And I don't think that changes. I don't even think that changes in a down market. Like if you look at what I think is one of the best media M&A deals, Disney acquiring Marvel.
Yeah, for sure.
That happened in August of 2009. Disney stock was down 20% at the time. And after doing the deal, Standard & Poor's put Disney on credit watch because they said they had overpaid. So, that was as tough a time as you can imagine, and that was an incredible deal. So I think IP, no matter what the environment, is always going to be valuable.
They're the gold standard when it comes to M&A for IP.
Yeah.
Star Wars, Pixar.
Yeah.
They've done
But-
well.
They've done
Yeah,
very
they did well.
But then if you go deeper, there's other areas that I think are really exciting. Documentaries, right? The spend on documentary has increased in the last 2 years by like 75%. And I don't see that stopping. And you see documentaries with Billie Eilish and Elton John, well over $20-30 million for license fees. I think talent-led companies, whether that's the Hello Sunshines or the Spring Hills, I think there's still a lot to come on that. And that's not just on the production side, it's also on the business side, creating businesses around their talent. So all that stuff, all those little pockets I think are still really interesting and robust.
I think Andy might have something to say about documentaries and production companies.
I think there's a great, both of you. But I was just saying both. On IP, couldn't agree more. We're the most acquisitive.
Ownership.
Yeah, so
Yeah.
we have a fund, we're dedicated, we have a team, and we're dedicated on buying IP across music, TV, film, video games, publishing, and the like. We couldn't, I think we've amassed at this point over 2,000 songs, catalog songs, over 1,000 feature films, I think over 800 episodic TV shows. So we're big, pressing, couldn't agree more on IP. And then on documentaries, in content in general, most recently made an investment in a company called Religion of Sports with Gotham Chopra, Tom Brady, Michael Strahan, taking iconic talent and brands across multiple sectors, so not just sports, but looking beyond, that have a story to tell. And you have Gotham, who's just the most magnificent storyteller. If you haven't seen Man in the Arena or The Muse, I highly recommend doing so. But really working with this A-plus talent and getting their story out there, and it's really hard to do. And only a few people can do it really well.
Yeah.
And so we're big believers in certain forms of content. The long tail is a little bit more challenging. I mean, just the enterprise value, think the sustainability, it's easy to make cheaper content. It's the ones that have either already a brand associated with them, so that when it goes onto a platform, a Netflix, an Amazon, a Hulu, the marketing spend is a lot less.
Yeah.
So it already has a connotation, already has a following. So when you think about social media and it gets out there, you're not starting from scratch and having to
No
spend
question.
$10-20 million like you would in the box office days. You already have that embedded base, and then you can launch from there. So that's been part of our thinking about that type of content
Yeah,
particular.
and I completely agree with all the things. I'm glad you mentioned music too. But certainly the concept of ownership, that driving all of these deals and being able to, and franchise content for the reasons that you mentioned, that have the built-in audiences and that kind of recognition that you could also leverage across all these different sectors. That's the big win. And you mentioned music. And we can only touch about music here, but I'm sure you all know about all the music catalog deals that are out there and what's been driving those deals. In a higher interest rate environment, it's a little bit more challenging. We won't get into the reasons why, but like the big prize that's in the marketplace today is the Pink Floyd deal. And so, they're looking at prices around what's reported about $500 million. So like there's deals of all different sizes in that world. Getting back to since we're here in film and television, then we'll get into games. Let's talk about predictions for Netflix. Will Netflix be bought?
Let's start with you. You give your answer, and then I'll go.
As much as anybody wants to say, because I'll say.
I mean, as I said in the beginning, they're an incredible company that has pivoted twice and to a great outcome. They're in the middle of another pivot, and I think all signs would say that they could be successful in that. Would they be a great complement to some of the bigger media platforms that don't have as strong a subscriber VOD business? Absolutely. But they're a very singular organization as well. And they have an incredible culture. They have an incredible decision process. So I think they're they're fine either way. They're great either way. They're just at a moment where, once again, they need to reinvent. But I bet that they will be able to.
Yeah.
I'd take the flip side of that.
Yeah.
Thank
Here's
you.
the reason why. Just to be controversial. No, I'm
I'm,
joking.
I'm with you.
Here's the reason why. Even though the valuation has come down and people are looking around saying, oh, Netflix is a bargain. Why doesn't Apple just go swoop them up? The issue is that they've now built duplicative infrastructure in terms of spending all this money on the pipes, the video on demand, everything. So while there's maybe a couple that would love to get 200-300 million subs all over the globe, I just don't see it happening because it's duplicative. Like, we could be wrong. I could be wrong. He could be
Yeah.
right. We could see an announcement tomorrow. But I wouldn't bet against Netflix in the long run.
Okay, so I think, and I've thought this for many years, and people have called me crazy, I think Netflix ultimately will be bought. I don't think its business model can work competing against the big guys that use their services to monetize their underlying core products, like for Apple, their hardware, things like that. But by show of hands, how many people out here think that Netflix will be bought? Okay,
We got
interesting. Okay, two. Well, we'll talk. So now we'll go to Warner Media. Okay, more than two. Good. Warner Media Discovery. Just recently, I think it was last week, the CEO David Zaslav said, "Absolutely not. We're not for sale." But how many times have we heard that from CEOs who have ultimately been acquired? So. I don't know if anybody cares to comment, but I'm just throwing it out there. Warner Media Discovery. Another one that many people think is ripe for the picking at some point.
I would just say the following. I won't make it about Warner Bros. Discovery.
Okay.
I would just say typically when two organizations that large come together and there's a ton of synergy, meaning they've quoted the amount of capital or amount of EBITDA they're going to generate through cost cuts, et cetera, you usually don't do that mid-flight. You usually go execute on that, get it nice and pretty, then you give one of us a call to say, okay, now it's time to go sell the asset or go do something transformative.
Okay. Yeah, it's good feedback. So Viacom Paramount is another one that may be interesting. I don't know. Disney, I mentioned this to all of you. Elite, getting back to like content and high quality content, A24, elite content, anonymous content, Blumhouse, I think those are all potentially ripe for the picking. Let's get into games. Emily, tell us about that sector.
Sure. So there was obviously a slew of deals earlier this year. Take-Two Zynga, Microsoft Activision still under regulatory approval, as well as Sony and Bungie. And so I think currently there's only a few players out there who have a portfolio of really well-known content, Electronic Arts, as well as Take-Two and the combined entity with Zynga. There's also some private scaled mobile players like Scopely, Playrix, Wildlife, Moon Active, and there's only so many in this space. So I won't comment on anything that's necessarily going on in the market right now, but I will say that I imagine that all of those entities will get a lot of interest, and whether they're able to come to a determination on a valuation that makes sense for both remains to be seen, but I imagine there will be a lot of inbound interest.
Why don't you touch upon Web3 a little bit too? Because
Sure.
I know that you actively play in that space.
Sure. So I think gaming is one of the most perfect applications for Web3. And so what we're seeing in the space right now is that, for example, DeFi, obviously the app marketplaces take about 30% of attacks when it comes to transactions on the marketplace. And there are platforms like Uniswap that have done $1 trillion in transaction volume that only charge 0.03%. So that's a huge boon for the gaming market if there is able to be Web3-enabled marketplaces like that that take a much lower transaction fee. There's also just the sheer kind of concept of gamers are spending, $200 billion a year on in-app purchases. And if you're able to make it in such a way that those in-app purchases have utility or the ability to be traded on the secondary marketplace, then the value of those in-app purchases rises immediately and people are willing to pay more. There's some kind of early proof points there, and that's something that blockchain does enable. So we're excited to see, usually the content lags behind the teams 2 to 3 years, but we're actively investing from the Griffin side in teams that we think will come to play in a couple of years.
Okay, so by vote, chair to chair, bullish or bearish on Web3?
I'm bullish, but less so on Web3, more on, I know this is going to sound cliche, the metaverse, but in a slightly different way.
Uh-huh.
What I mean by that is, just to piggyback on what she was saying, I'm starting to see all these worlds collide. I said this earlier, but I just was with the technology company. Fascinating. Volumetric capture. Imagine if you stood up right now on my phone, I could basically take a complete picture of you, AI fills it in, and then we're gonna drop you in whatever. What's your favorite video game? You look like a gamer. What's your favorite video game?
I'm not a gamer.
I'm totally joking. I'm
Oh,
gonna drop you into League of
come
Legends.
on now.
I'm gonna drop you into your favorite
Why do
video
you have
game.
to hurt me like that?
And imagine if you had your skin, but it's actually your picture, your physique, your height, playing the video game. These things are going to happen. And-
Hyperreal.
Yes.
Is it that company?
No, it's not that company.
Okay,
but,
that's a great company.
Or, for example, my avatar actually hanging out at the Travis Scott concert. It's coming.
Okay. Do you go to concerts?
I do. Bad Bunny last weekend. Good.
Virtually or real? I agree. I think that what I'm bullish on is the convergence between entertainment and gaming in the metaverse. And we did a deal last year for a company called Weta Digital, which the underlying technology was sold to Unity. And the basic idea was that companies in the entertainment space, technology companies in the entertainment space, can create 3D digital objects better than anyone in the world. And if you are going to create a metaverse that's compelling and cool for people to be in, they need those objects, and it needs to be, stunning visually. And I think there's a lot that's on the horizon for that, whether it's volumetric capture or just visual effects transitioning over to the metaverse. And I think if you get that right and you create a compelling space, people will want to be there. So
Okay, so let's go from there to IRL, to real life, because I know that live events is something you want to talk about. We only have about 3.5 minutes, so if you could touch upon it, I want to open the floor for at least a couple questions too.
Yeah, live events. I mean, I think look,
Yeah.
we're all back. We're all here without
Yeah,
masks.
yeah.
You went to the Dodger game yesterday. I mean, we want to get out.
Yeah,
I mean, and we're
for
thirsty
sure.
for it. Now we still have our fits and starts, and people are trying to figure out things, and the supply chain is real, and getting out all the equipment and understanding exactly how the schedule works and such is really a challenge. But when it gets through the system, it's going to be a nice outing.
One plug for one of the companies you mentioned. There's a really cool company called Save Live out there. It's about indie. Yeah.
We wanna keep it
indie
independent.
venues. So
Yep.
check that out. I think it's a great organization.
We're partnering or acquiring and investing behind the independent venue operators, letting them keep their brand, operate. But we're utilizing our platform, backed by Mark Geiger. There's no other person
Yeah.
who knows the music space better, both from the artist and from the venue side, and the bookers, and really utilizing, bringing our booking engine, our ticketing engines, our VIP, our food and beverage, and our marketing expertise to help these independent operators who have just gone through the most challenging 2 years to operate. They're family businesses. They're really good businesses. They got great brands, but they need assistance during this time. So thank you.
Yeah,
for plugging it. I'm a
absolutely.
big fan of what Mark's doing.
So we have a couple minutes for questions out there. Anyone? Yes, sir. What's your name?
Juan,
And Juan, who are you with?
the Los Angeles Film School.
Okay, great.
Hi. My question is actually for Emily. Emily, with the immersive experience that I see developing around Stranger Things, do you think that might be the future for gaming platforms, not only to be able to hold on to subscribers, but bring in new people around the different IPs?
Yes, absolutely. So, that goes perfectly to Netflix's acquisition of Next Games. Next Games was creating this game for Stranger Things. They had a game for The Walking Dead as well. And basically, this view that gaming is actually a horizontal industry, it's not just vertical. Entertainment can use it to increase retention on their platforms and to grow subscribers as well. And so to your point, I think the immersive experience of having something like Roblox be able to have 500 million visits for a Squid Games experience, as opposed to Netflix having 150 million views, on their platform in 30 days. There's so much opportunity there for industries like entertainment and others as well to use gaming kind of horizontally to continue to grow their platforms.
There's a company out there that I urge you to check out that's doing really interesting things they're using their technology for hybrid animation, so creating feature films, but using gaming and seeding the market with gaming so that there's a built-in audience, and then also putting it into the metaverse so you can play. It's really fascinating. It's called Trioscope, so TRIO scope. Worth checking out. I think they're doing fascinating things. And no, I'm not working with them. Yes.
Question.
What's your name and who are you
My name
with?
is Greg Emerson with Odyssey, and the question, I was baffled that you would think that Netflix would be acquired. Don't you think it's more likely that they would be the acquirer of a Paramount or a
I think they absolutely, I agree with you completely that they have very few franchises and they need franchises. It wouldn't shock me if they bought one of the boutique production companies that I had mentioned. That wouldn't shock me. They don't have the means to buy any one of the big ones that you talked about. Their valuation, and I don't know about their cash on hand, but their valuation is just hovering a bit above $100 million right now. Here's why I think they'll be bought. I kind of touched upon it. Just the content spends, to your point, the demand for content will only grow over time. And so and the best way that these streaming services have found to compete with one another is with content and marquee content, and so that's going to get increasingly expensive. When you have companies like Amazon who don't need to make money on their streaming service, they just use it as marketing for Prime Video, and when you have Apple that's using their streaming service as marketing to bring you in to buy other stuff, it's a very different business model, and I think that the challenges for Netflix to stay long-term independent are too tough, and they're so valuable that they can be picked up by one of these other guys if the feds allow that to happen, and that's the big if.
Full circle.
Yeah.
Antitrust, you covered a lot.
Yes. All right, everyone. Thank you all for joining, and thanks for everything, guys. Yeah.